Next, we're going to talk about Part 3, expenses. And here again, the Part 3 has columnar headings, and down the left-hand margin of Part 3, you're going to see categories of expenses that are assigned to the overhead for the company. Now, what's important to keep in mind here is that these categories for expenses have been around forever, since the beginning of time, basically, for statutory accounting. So when you look at Part 3 for any insurance operation, any property casualty company, you're going to see the same structure. So first, let's talk a little bit about the columns and the columnar headings. Column 1, loss adjustment expenses. We've touched on this several times. What you're going to see here are the actual costs associated with settling claims for that company. Column 2, you're looking at other underwriting expenses, and this generally can be considered the overhead of the company. And column 3 are investment expenses. And these can be relatively specific, but they can also be fairly general in terms of overhead, because you've got different departments helping to keep track of investment accounting and things of that nature. You may have brokerage fees and things that are specific investment expenses. All that's going to be reflected in column 3. Column 2, as I mentioned, other underwriting expenses can be somewhat general overhead in nature. And in fact, if it doesn't fit in column 3 specifically, or you can't identify it as having fit into column 1, loss adjustment expenses, by default, it's going to wind up in column 2 as other underwriting expenses. The categories in the left-hand margin that I mentioned earlier as being specific to the property casualty insurance industry, you're not going to be able to create your own categories here. You're going to have to fit your expenses into these line items. And so if you look at Part 3, you'll see that the top section refers to claims adjustment services. And when you look across columns 1, 2, and 3, you'll see that there are no amounts in columns 2 or 3. There's no assignment. These expenses are specific to loss adjustment costs. Next section down, commission and brokerage. You can see that those are specific to column 2 because they're policy acquisition costs. Commissions are acquisition costs and marketing costs associated with producing that business. So you're going to see the commission activity in column 2 for Part 2, and you're going to be able to see that column 1 there are no amounts, and column 3 there are no amounts for commissions and brokerage fees. So it's specific to that particular column. As you move down Part 3 and you come to line item 3, allowances to managers and agents, and 4 is advertising, you can see that that goes on down, lists regular generic expenditures for the company. Now you've got amounts in the first 3 columns for each of these respective expense categories. And that would make sense. You've got general overhead, you've got claims adjustment services that may not be attributable to any specific claim. So there's going to be an assignment of overhead here for advertising, salaries, employee benefits, things of that nature. Companies have different methodologies for assigning these expense amounts to these categories. It just depends on each company. And in some cases, it does make a difference because when you're looking at various industry ratios, how companies assign these expenses to each one of these first 3 columns becomes important to those ratios. So you may want to have a little insight on how that company is allocating those expenses between column 1, column 2, and column 3. Down below the section that we covered with the expense categories, you'll see that we also have real estate taxes, licenses and fees, and other general expenditures. Below that, we get into total expenses incurred. Those are the numbers for these respective columns that are going to appear in other areas of the financial statement. So you can track column 1, 2, and 3, the incurred number, back to a specific amount in the financial statements themselves.